Welcome to our next topic focused video. This time we're going to be taking a look at fixed income across the 3 CFA exams. Now this does appear in all 3 exams. The syllabus weighting is fairly similar for level 1 and level 2, so 10 to 12% and then 10 to 15%. And then level 3 it increases to 15 to 20%. So it is a notable amount across all 3 exams. These are the 2023 weightings. Why do we look at fixed income? Well, within the CFA curriculum, you look at a few key classes of assets. So for example, equity, alternative investments, and fixed income is another one. It's one of the largest investment types in most markets globally. And it's important that you understand how the markets operate, the characteristics of fixed income investments, and how to value them. How to value a fixed income investment to see whether the trading price is one that you are happy with, whether you'd like to be on the buy, sell side, etc. So analysing potential fixed income investments from both a risk and a return perspective. In terms of level 1, it does start off as an introduction. So first off, within the fixed income topic at level 1, you'll look at terminology. So getting comfortable with the different types of terminology that are used. So for example, the coupon that is paid on bonds rather than interest. We look at the market operations, so how these are traded. And there's also a look at credit analysis, so credit ratings, for example. One of the key topics at level 1 is an introduction to the valuation of fixed income investments. Now, the time value of money principles that you will have learnt within quantitative methods and covered there crop back up here, as well as various other places in the level 1 curriculum. And they're the basis for fixed income investments. So having a look at the cash flows that the fixed income investment is going to provide and trying to find the present value of those. There's also an introduction to asset-backed securities. So whilst bonds are the most heavily covered fixed income investment within level 1, there is an introduction to things like asset-backed securities. So for example, mortgage-backed securities are covered here. And then there's a bit of a deeper dive into the risk versus return perspective. So you may have heard of duration, and that's one of the key elements that's covered within risk versus return. At level 2, there's a more detailed look at the terminology and how to value the fixed income investments. And the valuation goes a step further, looking at bonds which have embedded options within them. So that would be a bond with a call option or a put option within them. There's also a look at credit analysis models and credit default swaps in level 2. As we said at the beginning of this video, this is also tested in level 3. It's looked at from a portfolio management perspective. So looking at how fixed income would fit into an overall portfolio and then different investment strategies which could be taken. And so you can see here that there's a few different investment strategies which are considered: liability-driven strategies, index-based, yield curve, or active management strategies. In terms of my top tips for covering fixed income, and this is true across all 3 levels, first off is understanding the key terminology. When we read a question, we don't want to be stumbling over the different terminology that's used. We want to be able to read that and understand it just as second nature. Then we can focus on what the question is actually asking with regards to either maybe a calculation or our analysis, maybe something to do with the risk of the investment. As you're going through and different products are covered, so whether that be bonds, whether that be asset-backed securities, try and consider these, and at level 3 the different strategies as well, from either a holder perspective or an issuer perspective. Of course, if we're looking at the strategies from the investor's perspective. So think about what risk each party is exposed to, what the return levels are, advantages and disadvantages of different assets that fall within fixed income. And the calculations, like I will say across most different topics, the numbers are important, but they are not enough. Focus on what each calculation is showing. So yes, Some questions will be numerically based, but a lot of the questions will be based on your understanding of what these show, especially as you get through the higher levels. So focus on what each calculation is showing and you shouldn't go too far wrong.